All righty. I think we are live. We have myself, Ron, and Greg here. Let me just give it a minute to see if folks are coming in. There we go. We got 11 people already. Starting to scale up. That's pretty cool. Well, awesome, everybody. So excited to be here with Greg, CEO of Trifecta and a great Rockerbox customer. We're going to be talking about the Q5 effect. And I'll tell you, before Greg and I started talking, I actually hadn't heard this term before. So I was pretty intrigued. And after learning more from Greg about how kind of the impetus behind it and the thought process behind it, it's pretty interesting. So really excited to talk about it and how the Q5 effect, as we're calling it, how that really presents a really big opportunity for growth, particularly given Greg's business at Trifecta. So thanks for taking some time, Greg.
Yep, absolutely. Thanks for having me. And yeah, I would love to take credit for it, but we got it from Meta. They were the ones that originally coined Q5 as that gap after the holidays and before the January CPA drop.
These folks at Meta, they're good at branding, aren't they? Except for the change to the name Meta. That was a bit of an unexpected one. Before we dive in, we'll obviously give a quick background on ourselves. I'm Ron Jacobson, co-founder and CEO of Rockerbox. Big thank you to everybody who's been joining holidays today. It's been awesome to see the participation and the excitement from our customers, from our partners, and everybody in industry. Obviously, we're only as good as the folks who help to make these sessions actually meaningful. So big thanks to Greg from Trifecta. Greg, if you want to introduce yourself and maybe give a bit of a high level on Trifecta.
Sure. So the quick and dirty on myself and Trifecta, multi-time entrepreneur, actually coming from the software as a service space. So your world, Ron, and now in direct-to-consumer e-commerce. So Trifecta is a direct-to-consumer meal delivery service where we ship literally millions of meals to hundreds of thousands of customers across the U.S. We launched the company 8 years ago. We've since sold almost $500 million worth of food, scaled the business up into a 9-figure ARR run rate, and ultimately use as many tools and tricks as possible from a digital marketing standpoint, like Rockerbox, to help us manage an almost purely direct consumer brand.
Well, listen, I mean, those are some huge numbers. So a lot of credit to you and your team and what you guys have built. But before we actually even dive into it, I'll say hearing you talk in terms of ARR is a bit different than how I hear a lot of our other more pure play e-commerce companies speak about their businesses. I'm assuming that's because of the subscription component of your business. But yeah, I'm curious, is that how you think about your business in terms of how you forecast and kind of operate it in terms of like an ARR methodology? Is very much how we think about Rockerbox. So
yeah. No, it's a great question, and yes, because we are a subscription model, we do look at orders and number of items on orders and stuff I think more traditional e-commerce businesses would look at. But because we are a subscription business, we are looking at LTR, LTV, AOV, ARR, a lot of the metrics that you would normally see in something like a software as a service business. I think probably the biggest delta is we're a weekly subscription. So most software as a service businesses are monthly, whereas people are buying food from us generally every single week. And that creates a whole bunch of forecasting complexity, but at the same time means we can drive really high LTVs really fast because, we're getting 4 to 5 orders a month instead of 1 order a month from a customer.
Wow, that's awesome. And yeah, I love that perspective. It's very much rings true again to like how I think about Rockerbox in our business. Despite being a monthly, not quite at the weekly cadence you guys have been able to get to yet. Maybe that'll be our 24 goal. So yeah, we Greg and I had a chance to sync up before this. We have a couple topics we're going to go through. All of this really helping. We want to be really, really tactical. And this is something Greg conveyed multiple times. Wants to make sure that the information we're giving hopefully can be used by you and your team and your companies to make some improvements in the next 1, 2, 3 months as we head into the holiday period. So super excited about this. I guess we'll start with a high level one. Just generally, how do you think about the holidays, and even more particularly for your business, that post-holiday season. I know for you and generally, both the weight loss and the food side of it, which go hand in hand, coming to January is really important for you. But I think it's even earlier than that. So anyway, I won't dive into it. I'm curious, just how do you think about approaching the holidays, Greg?
Absolutely. So I think for your customers and the people watching this webinar, the main things to consider are you a holiday centric or a not holiday business? And we're a great case study for this because we are not a holiday business. What everybody loves to do during the holidays is visit their family, eat, home cooking, whether it's pumpkin pie or that Christmas ham or whatever it is, that you celebrate with. They don't want to eat diet food, which is what we actually sell. So we see two big dips in our orders on the week of Thanksgiving and the week of Christmas. Those are giant blips in our kind of order frequency. Now, we compensate for that by going into the holidays and the post-holiday season with a plan. We go in the holidays knowing that people are thinking already about, in this case, 2024. So we're planning campaigns to capture as many leads as possible that we can potentially convert after people have gotten through their holiday period. Now, for people that are a holiday business, which is most brands, most direct-to-consumer brands are selling, watches or shirts or shoes or something that people want to buy as gifts for the holidays, they may need to plan, literally right now in order to get prepared for the big campaigns that they have going into the holidays. So for us, we actually plan for both the holidays and Q5, where we will have very different types of campaigns, with the holidays being a lead capture campaign for us, where when CPAs are actually much higher for us because everybody's bidding the crap out of the platforms. And then going into Q5 and the following year, in this case, 2024, when we know CPAs are going to drop, we're going to have a huge bank of leads that we've built up for that, particular big push for us. So I think the first part of it is knowing what type of business you are. Are you a New Year's resolution business or are you a holidays business? And then building your campaigns around what particular type of customer that you're addressing. For us, we'll also do big Black Friday, Cyber Monday campaigns. We know CPAs will be a little bit higher during that time period, but we'll start Black Friday, Cyber Monday as early as the first day of November, which, I know a lot of, holiday aficionados hate that, but for brands, that date to launch has moved further and further back because we're chasing those lower CPAs on the media buying platforms. So really our approach is to go into the holidays with a plan. And for us, it's a different plan for the holiday season where we'll have a campaign like, the 12 days of Christmas, where I'll give your audience an example, where we will partner with a lot of other brands that are non-competitive in our space to give away a bunch of items during the 12 days leading up to Christmas. And, during those giveaways, what are we focused on? Lead capture. So we're trying to get tens of thousands of emails so that when it is our prime time, which is December 26th, literally the day after Christmas, people click over into thinking about January 1st, and we see a tsunami of orders at that point. And that's really just a lot of planning on our side of the fence. And we execute that both for Black Friday, Cyber Monday, as well as for Q5/January 1st, where we're planning leads in advance so that when we do get to those high conversion times, we're really pushing the promotions to try and convert as much as possible.
Super interesting. I guess I'm curious, even like operationally, in terms of like maybe we have clients who have customers who have daily plans, weekly plans, monthly. I mean, everyone has kind of their different cadence. Did you kind of freak out that first year when Thanksgiving Day happened or Christmas Day happened? You saw those sales drop because you didn't have the year before comparable to look against. And I guess more broadly, the question is just like, how do you think about using historicals to plan for future years, that Q4, Q5 time period?
Yeah. So for us, historicals are critically important because it's not just my board yells at me for getting my forecast wrong. It is that we're dealing with fresh food. So if we order too much food, we introduce waste into the system, which is, an EBITDA killer for a business like us. So ultimately, yes, the statistical forecasting, how we model out our orders, is critically important. And yes, the first year we launched the business in 2015, and we were definitely surprised that people were totally bailing on their diets for Thanksgiving. But we were also pleasantly surprised that for Black Friday, Cyber Monday, they were really interested in promotions for a food business, which we didn't know if they were going to be buying electronics or TVs or purses or other stuff, but they really wanted to invest in their physiques and their health, and they ultimately did end up buying on Black Friday, Cyber Monday. So I think there's two different types of modeling people should be thinking about. One, forecast modeling, which you're talking about, which is going to feed into your ordering, your financial model, all of that. And then media mix modeling, which is, what platforms like Facebook's Robin will do for you. There's lots of different ways to really try and model out your media mix that's going to be most successful for you during this time period. And for us, we pretty quickly learned that lead capture was critically important. We needed to capture a ton of leads in advance of these big promotional holidays so that we could capitalize on them in a very short period of time in a less expensive channel, because we can't just blast more money into Meta and Google, because that's when CPAs are the highest. Everybody's blasting more money into Meta and Google. We had to pre-plan with a lot of lead capture so that we could really keep our CPAs down and maintain our customer acquisition costs going into these time periods.
So you're probably all in on emails during that time period. Then are you doing SMS as well, or is it primarily email based?
Both, yeah. So in the beginning we didn't do SMS, but over the years, we incorporated SMS into that, and yeah, we're looking for ways that we can communicate with our customers inexpensively, very effectively. And same goes with our influencers. We have hundreds of celebrities and celebrity athletes we work with that eat our food, and we tee them up for the giveaway campaigns as well as the big promotions. We for Black Friday, Cyber Monday, we'll have them start posting in waves going through that weekend, starting on Friday, pushing all the way through Monday, so we get that huge spike in conversions even when CPAs are more expensive.
It's actually a really good segue to some of the main challenges you're facing. It seems like a lot of them are around CPAs, obviously. Makes sense, right? That's the cost of acquiring a customer. You mentioned a really interesting anecdote around kind of how competitors, as an exogenous kind of factor, they can have a huge impact in your business. So I'm curious, like how have you had to, what's that been like? How have competitors been coming after you, coming after you? How have you dealt with it?
Yep, absolutely. So we are in the unfortunate situation that we have one mammoth competitor in our space. I'm sure you guys are familiar with the brand. They have about an $8 billion a year ARR, which means they're spending about $800 million a year in paid media and $800 million a year in discounts. So their total customer acquisition cost is $1.6 billion. And that's significantly more than we have ever made in the history of the business. And they're spending that on an annual basis. So we really have to focus on, areas that we can keep our customer acquisition costs down. And that means, getting more creative with offers. I see, Ryan was asking about how we can generate leads in the questions. That's us having a big focus on lead capture. We use a platform called Braze that's allowing us to do pop-ups. We'll have embedded lead capture in a lot of our blog posts. We've found for our particular industry, quizzes can be one of the most effective ways to capture leads. And our most effective one is people come to our website and they go, well, my name's Ron. I want to get into shape. You have a bunch of different meal plans for me to choose from that match like vegan or paleo or keto. Which one's best for me? So we put them through a quiz that's 6 questions. That's like, hey, how old are you? How much do you weigh? What gender are you? This, that, and the other thing. What's your activity level? And then at the end, we say, okay, we'll send you your quiz results, which of course is we're asking you for your email for a lead capture process. So we use pretty much every tool in the book for lead capture, whether it's, pop-up discounts, whether it's quizzes, whether it's giveaways, whether it's influencer giveaways. So we have our influencers do posts that lead to landing pages that are co-branded with those influencers. There are a lot of different ways we're capturing leads because of literally this question. We can't afford to spend as much money as our largest competitor. They have an absolutely mammoth digital marketing budget. And because of that, we have to find clever ways to keep our customer acquisition costs down, because they can spend roughly triple what we can spend to acquire a customer. And, everybody knows that Meta and Google and, all the platforms are bidding platforms. So they're going to take bids from the highest bidder. And, we have to get clever with, the way we're going to address those larger CPAs. Above and beyond that, I will give you a Rockerbox plug on this one. Is we look at multi-touch attribution very strategically. So we're looking at, if you just look at a pie chart of our multi-touch attribution, you would see influencers are something like 7% of our overall conversions. Well, if I left it up to some of my board members, I'd just flip the table over on that and say, influencers don't work. What we need is more of this channel called direct organic. Well, guess what? Influencers, paid media, a lot of these other things are what are leading to direct organic. Yeah. And a big mistake that I see a lot of digital marketers make is they don't consider things like CRM as well when it comes to direct organic. A lot of people, myself included, I use Gmail as my personal email client. If I get an email from a brand, I'll open it up in Gmail so I can see the coupon code. Then I push that Chrome button on my phone and go to the brand's website, and I'll see the coupon code while I'm going through the buying process. Now, I didn't click the UTM in the email, so that's going to lead to more direct organic traffic to the website, even though that's technically CRM traffic. So that's where, media mix modeling and more sophisticated understanding of how your marketing mix is ultimately affecting your direct organic traffic. And, that's an area that a third-party platform like Rockerbox is going to give you more trustworthy visibility into your media mix, because Meta is going to say, Meta's the greatest thing on earth. Google's going to say Google's the greatest thing on earth. They're both going to skew the numbers in their favor because they're trying to take as much attribution credit as possible. So I could digress on the entire rest of this webinar on that topic, but yeah, our big challenges are the bigger we get, the higher our CPAs are. So we have to be more clever with our marketing campaigns, and we face an enormous competitor who owns probably 90% of our entire market. And because of that, has a massive budget that they're able to drown smaller competitors with. So, a lot of different elements I could go into there, but those are the big ones.
Listen, I actually think at times having that giant competitor is almost like a benefit because one, it gives you something to rally towards. Like, hey, this person's there. It's a David versus Goliath. We're going to have to be smarter. We're going to have to be more nimble. We can't just copy what they're doing. And I think it forces us to become much more creative. And I think that creativity is really how companies shine. One of Rockerbox's values is do more with less. And it's very similar to what you're saying. We can't just win by copying everybody else. We can't just win by spending money. We need to win by trying to be smarter and more creative in terms of how we go to market. So that resonates really closely to at least kind of how I think about Rockerbox. Yep. I'll call out to your point on sort of that direct organic traffic. Yeah, we all want more of it, but something has to be causing it, right? And I think that's also where we've tried to build up technology around promo code mapping and identity resolution and using post-purchase surveys, all these other different ways that we can understand, maybe that person who came to your site direct but used a promo code that came from your CRM program, maybe that actually should be CRM that gets credit for that as opposed to direct. So trying to be smart about that as well. I guess one kind of a final question on this topic is, are you seeing anything lingering from, a couple years back, all we talked about was iOS 14.5. Do you feel like you're still seeing any lingering pain there, or are we kind of at a new norm? Have we stabilized or not?
I think we're at a new normal, which is Tim Cook sucks, and he kneecapped Meta and Google in that play, and we still don't see the retargeting ROASs that we saw prior to iOS 14.5. That doesn't mean we shouldn't have a more fully fleshed out funnel. I think that's one of the traps that media buyers fall into and digital marketers. Is Facebook will actively tell you if you have a campaign that's focused on conversion and that campaign also got touched by, an ad set that was more top of the funnel focused, maybe it was add to cart or lead capture or just brand awareness, Facebook's going to give that credit to the conversion campaign. So what happened is media buyers crushed all their marketing spend down towards those conversion focused campaigns. Well, that gave you more expensive media buying. So CPAs went up when that happened, and it stopped the advertising at the various stages of the funnel where you were, doing stuff that digital marketers knew was smart, like spreading brand awareness or optimizing for add to carts. So we would see things like we would increase our add to cart and we would see more conversions on our conversion focused ad sets. So we, ultimately would normally look at that inside of Facebook and say, oh, these add to cart ads are trash, or we need new UGC or other creative. Yeah. But in reality, you kind of have to stay the course and say, okay, I know this is effective marketing to be a more full funnel marketer. And the fact that we just have a 7-day window, sometimes less coming from Apple is just a challenge that all of us are going to face going forward. So yes, we've had to get more creative. I mean, I remember, I look back at the days where I was getting a 3 to 4x ROAS in Meta on the first order. I mean, I look back and I'm like, I should have put $1 billion in when that was going on. We were scaling like 300% year over year. And I was like, okay, this is really fast growth, but it's like reasonable, responsible growth. And what I probably should have done is tried to scale, 15,000% a year and just pumped as much money into Meta as humanly possible. So yes, I think we're in a new normal, but that new normal is not the same as pre-iOS 14. And I think we just need to get media buyers to collectively convince America to throw away their iPhones and buy Androids so that we can get some of these privacy restrictions clawed back.
Well, it seems like Tim Cook is spending a lot of his time in those, was it the Mother Nature videos these days? So maybe he's already onto a new topic himself. It is interesting though. Like, I always think of this concept of like arbitrage, and I wonder if the marketers who kind of recognized what was happening quicker and wasn't drawn just to those bottom of funnel campaigns, and was actually able to kind of step back and recognize, we still have to be investing in brand, we still have to be investing in upper funnel. It seemed like that was like one of those arbitrage opportunities that can emerge. Maybe that leads to lower CPAs as well. So interesting position for you to be in.
Yep, absolutely. And I think it's pretty common amongst brands. I think some have figured it out better than others if they have more sophisticated first party data, more sophisticated marketing mix modeling. But it's difficult. I mean, the other trap you can fall into is if you look at the correlation between conversions and media buying, when you have a fixed CAC, you can oftentimes end up saying, oh, well, our paid media spend is very highly correlated to our conversions. Well, what's actually happening is when you have a marketing event that's causing a lot of conversions on that day, like let's say for us, it's the CrossFit Games, or, it was a UFC fight or the Mr. Olympia or something. Your media buyers are then able to spend more to maintain that lower CAC. So it seems like, hey, we spent a lot and got a lot, but they're actually, they're correlated, but not, there is some causation there, but it's not the whole story. And you have to be really careful from an attribution standpoint from that perspective. Otherwise, you can end up with these huge customer acquisition costs, and you end up with a financial model that's upside down.
Yep. No, that's well, it's nice to have those giant spikes in interest. So I'll tell you that I'd rather pick that problem than not have it, right?
Yep.
I guess kind of fast forward ahead, and I'll just, for anyone listening, it's numbers are going up, which is cool. You can ask questions too, by the way. So if you have any questions, by all means, please ask them. If it's relevant to what we're talking about right now, we'll jump in right, kind of live. Otherwise, we'll have some time at the end as well. I guess question 3, challenges. There you go. How are you addressing these challenges and setting yourself up for success? How is Rockerbox helping you in that respect? I know you kind of just spoke to a couple of those, but anything else that you think is like top of mind? You mentioned obviously having some skepticism for the platforms. I fully agree. I think that they're a very powerful tool, and you need to treat them that way, and you need to have somebody who can help you actually validate if they're doing what they're saying or not. But I'm curious, outside of working with third-party measurement and just being really thoughtful and kind of looking back at historicals, like what else have you been doing to make yourself succeed despite all these challenges?
Yeah, I think you are right that being skeptical of the platforms is always key. I mean, third-party measurement is critical at this day and age, just because measurement has become so much more difficult. But I think at the same time, allowing yourself to run tests. I mean, that's one of the more difficult things to do in any business, especially the direct-to-consumer business, it feels like we're constantly on a treadmill racing for the next shiny object, the new next best campaign or thing we're going to do that's going to increase conversions even higher than we're at today. Yeah. And, it's sometimes difficult to say, okay, we're going to turn off several DMAs, in order to test whether Meta is more successful in those particular DMAs.
So are you guys doing that now?
We are, and we have done that historically in the past. I had a number of conversations with the director of global data analytics at Snapchat about this topic, John Eckhart. He's a phenomenal data scientist, leads a team of like 50 plus people at Snapchat that are specifically doing media mix and marketing mix modeling. But yes, like actually taking the time to run those tests can be very instructive for you to understand, where are we actually getting the most bang for our buck? Because everything is ROAS focused. I'm a CEO. I'd let my media buyer spend $100 million a year if he was delivering ROAS. Yeah. If he's, and of course he is, to a degree, but we have to watch, okay, what campaigns are more successful this time, that time, et cetera. And I think in our industry, influencers are starting to become more savvy. There's a big education curve that's happening in the creator landscape, which is helping in a lot of ways. It's getting, higher quality UGC and various other things for us to media buy with. At the same time, they're starting to recognize they're worth more. So, they start asking for more money or, higher CPAs or, various other things. If you look at the makeup and beauty industry, direct to consumer, those influencers are extremely savvy. And because of that, they're very expensive. So really, I think looking at your particular industry and going, okay, where is the white space that we can expand into? Maybe it's SEO, maybe it's, creator / influencer, maybe it's getting, shelling out the cash to get a full blown, celebrity on board that you can use in ads. That's going to increase your ROAS in ads. Like those are the trade-offs that, CMOs, CEOs, marketing directors, media buyers, et cetera, want to make because, if I get Arnold Schwarzenegger in an ad, yeah, I had to pay a bunch of money to get him to make the ad, but now the ROAS on those ads is going to be significantly higher because he's such a recognizable character. So, those are the type of trade-offs that you really need to think about to break through some of these challenges and become a more effective marketer. I mean, we're infinitely more effective than we were in 2015, but the landscape is significantly more challenging than it was in 2015. And, because of that, you have to continue to innovate. And, part of that is third-party measurement, us being able to do much more sophisticated data analytics, looking back at pre-iOS 14 and going, okay, what seemed to be more successful back then, and maybe we should, adjust different stages of the funnel to be more effective in, those particular channels or otherwise.
Yeah, it's one thing you kind of call out that really is interesting for me. Mentioning testing, media mix modeling, obviously Rockerbox, and say like a big theme for Rockerbox this year. We've been going to market very heavily on this idea of diversified measurement is a phrase that we launched, and it's actually getting some good traction. So I'm heartened to see that. To us, that meant we dove into media mix modeling earlier in this year. Obviously, our bread and butter is our MTA foundation. We don't actually ourselves do anything involved in media execution around tests. We do help some clients analyze the efficacy of geo holdout or scale tests they're running with our data. But all that to be said, I guess, given that you're leveraging these 3 different types of measurement, maybe even surveys and things like that, what do you as a CEO and maybe your marketing leadership and even your board, how do you kind of handle the situation where these different methodologies are coming in telling you different results? It's a question we get all the time from our customers, and half of me wants to come and say, with Rockerbox, you're never going to see that, but that's just not the reality. There will be divergences. So I'm curious, how do you guys deal with that?
It's a great question, and yes, I mean it comes down to testing. If you're getting different results, it's probably not that one is 100% accurate and the other one is 0% accurate. You have to look at the different results, attribution wise or otherwise, and it's telling you a story. There is nuggets you can get out of even the in-platform measurement. I wouldn't completely discard it. We look at that. We look at our tests. We look at third-party measurement. We look at impact to the P&L as well. Oftentimes people ignore, what's actually happening on the bottom line. I mean, we did a multi-order discount strategy, and we were like, wow, this really results in much better retention, but it had such a huge impact on conversion and customer acquisition cost that if you didn't look at the full picture and see in the P&L, the impact that it was having on, your top line and your EBITDA, then, I would have said, oh, this is the retention solution for us, because retention is obviously very important in our industry, as it is in, any industry. And, we would have focused on that instead of, the whole picture. So I think really thinking critically about the story each one of these measurement tools is giving you, as well as comparing it to the financial impact that it's having on the business, is how you can most accurately navigate these waters. That is what we've been doing for quite some time now, and it gives us much better visibility into the levers of the business and the impact certain changes to offers, discounts, landing pages, any element of the funnel, and seeing how that flows through to EBITDA, because that's what everybody's focused on right now. And in 2021, we raised a $20 million Series B. Everybody was focused on, growth at all costs. And right now we're in the middle of a fundraise, and then all the investors go, yeah, we really want you to be growing rapidly, but we want you to be doing it profitably. The market has changed. Wall Street has changed. There's been valuation multiple compression. People care about profitability now. They want to see EBITDA numbers, and that is going to come down to, measurement quite a bit, and measurement across all of these different tools that entrepreneurs as well as, marketing leaders are going to have access to.
Does that lead to a world where, I guess, how does finance, or maybe even like your operations function, leverage output from marketing measurement companies? Like, are they looking at the CPA that Facebook's reporting for itself, Rockerbox is reporting itself, maybe some other one as an input to how they start to build their models? Sorry, I know we're going off topic here, but this is, I think everybody's super interested in how do I become EBITDA positive and profitable now. So the intersection of marketing KPIs and financial planning is, I think, just a really important topic these days. So yeah, I'd love to know, like, is the marketing data how does your marketing data make its way to finance, if it does?
Yeah, I think there are a few different elements to it. One that in the end, the P&L is all that matters. So what you ultimately have to get down to is, a blended CAC. That's what investors are going to care about. And if that blended CAC is, at a level that's going to support the unit level economics of the business, then you're going to be in great shape when it comes to fundraising. But even today, they're not going to fully trust the measurement tools. They're going to care about a blended CAC. And that's, they're going to look at the high level unit level economics, and more sophisticated investors will get down into the weeds of, the efficacy of different channels. But that's going to be like stage 4 of your due diligence in a fundraising process. In the beginning, it's like, okay, do your unit level economics make sense? For us, it's like, are you Trifecta or are you Blue Apron? Like Blue Apron reached $1 billion in revenue, but they were spending $400 to acquire a customer that was bringing them gross profit of like $260. And in that case, it's like investors are going to look at it and go, oh, your unit level economics are upside down. You're paying money to buy every subscriber. This business is going to have a lot of challenges, and they have. They're north of 400 million in revenue still, and their market cap is 60-70 million bucks. It's been a disaster for them. And most industries have a player like that. They raised a bunch of venture capital, blew it all on paid media because they didn't pay attention to webinars like this one, and ultimately ended up in a situation where their stock was worth nothing afterwards. Like, it's not just about growing the business, raising capital, getting to an IPO. Like, you need to be successful as a business after you IPO. Otherwise, your stock's not going to be worth anything, and there's no pot of gold at the end of the rainbow for anybody, you or your investors.
Yeah, 100%. At the end of the day, the best measurement is are we profitable or not, right?
Yep.
Cool. I guess final, I think, pre-arranged question, but do you, generally, kind of how do you think about your measurement plan heading into the holidays? This could both be obviously Rockerbox focused, but I mean, more broadly, I think everyone wants to know just, how do you look at measurement in terms of the holiday season? What frequency are you looking at? How frequently are you making reevaluations? And all the way down to very tactical. Like, is there a certain report in GA that you like, or is there a certain pivot that you're doing every single week? Just curious, like, kind of what does the next couple months look like for you guys?
So for us, because we've been in business for 8 years at this point, we look back at historicals quite a bit, and we plan around those historicals for everything from lead capture campaigns, like I mentioned, to timing of different campaigns. It's pretty phenomenal how big of an impact seasonality has on our business. I mean, the second December 26 hits or Black Friday hits, it's like we can't spend money fast enough. And I think for a lot of media buyers, entrepreneurs, marketing directors, CMOs, that the planning is what's going to ultimately lead to the most success when it comes to measurement, because measurement is really after the fact. You want to look at your measurement from last year and make informed decisions about your plan for this year. Then from there, you're building a go-to market strategy for that particular campaign. You're coming up with what you're going to do in each channel with your marketing team. You're assigning out those tasks, and people are going out and shooting videos or creating pop-ups or getting UGC or, whatever in particular is going to go into that campaign. Measurement tips that I wanted to share that are, Rockerbox advantageous. We oftentimes use the large ad hoc exports you guys have in the platform, which allow us to review giant time frames, like looking back at previous years and seeing trends. In Google Analytics, that would take forever for us to do. It's a big advantage that we have gotten out of Rockerbox that, I shouldn't tell you this because you're CEO of the company, but, we ROI more than the entire year's worth of platform subscription just during the holidays, planning when we're going to run the different campaigns. Google Analytics doesn't include spend, so there's no in-platform CPA like there is in Rockerbox. That's particularly important for us because we're managing spend on a daily basis, hourly basis even. I mean, we're looking at day parting. We have tons of people that buy on Sunday and Monday, a medium amount that buy on Saturday and sometimes Friday, and then Tuesday, Wednesday, Thursday are terrible for me. And that's ultimately because people are busy with their week and they're not thinking about meal prep and planning the next week. So, you know, really us planning our CPAs down to the day, sometimes down to the hour, is a big key to our measurement success. And yeah, it requires our media buyers sometimes being, you know, on 24/7, but, you know, it gives them the flexibility to deliver a very high ROAS on a consistent basis. And then the last one I would share is looking at the marketing paths view in Rockerbox allows us to get a much more clear idea of the impact that different channels are having on each other. How are the channels operating together, which allows us to make more sophisticated, holistic go-to marketing strategies for times like the holidays, because we don't have time to have December 26th hit and come up with a plan. Like, we have to go into December 26th already well prepared. We have to go into Black Friday, Cyber Monday already well prepared. And, you know, that comes from us understanding how the channels are interacting with each other in advance. You know, that can be us reaching out to our big, you know, we call them pay to play partners. So maybe it's us getting on a Black Friday, Cyber Monday listicle on, you know, Healthline or CNET or, you know, some of these other platforms that we partner with. Maybe it's us teeing up the influencers in advance so that they know what campaign they should be filming Instagram reels and YouTubes for. You know, all of that type of stuff requires planning in advance. And that requires looking back at historical measurement numbers to go, okay, what are the marketing channels we need to execute most efficiently in for us to make these campaigns a success? Because then I'll give you an example. In 2022, I spent about $1.5 million in the month of January media buying. In 2023, I actually dropped that down to sub $1 million, about $970,000. But our ROAS increased and we actually had higher conversions. We had our all-time high conversions January of 2023. And it's because we went into it with a better plan, because we had done more diligent analysis on our measurement from the previous years. We didn't just go into it like Yosemite Sam, using, you know, spending money as fast as we could. We went into it with a well thought out, methodical plan. So, you know, my advice to people listening in and, you know, CEOs, marketers, CMOs, et cetera, is, you know, planning is where you're going to win. It's not going to be, you know, those 14-hour days where you're trying to media buy as, you know, efficiently as possible or measure as efficiently as possible. It's looking back at historical measurement, studying the trends and the channels that activated effectively, and then building a go-to market strategy and campaign for those holidays well in advance so that you're executing efficiently with the resources you have, which may be one person, it may be 30 people, it may be 300. But you've got to plan it in advance if you're going to have an effective campaign. And that's going to be dependent on looking back at your historical measurement and saying, okay, what worked, what didn't, and how can we be more cost effective this year at a larger scale?
Listen, I couldn't say it better myself. I know we're just about coming up with time here. So I just want to personally say thank you so much, Greg. I think I learned a ton here, and I feel confident that everybody else that listened in did as well. I'm actually now going to go. I'm more inspired than ever to eat healthy now. So, you know, I'm going to go. I got to go subscribe myself. But again, thank you so much. Listen, the proof is in the pudding. 100 million ARR business is that's a great place to be. So props to you and your whole team. And again, thank you so much for taking some time and sharing knowledge with the whole team. So hope you have a great rest of the day, Greg, and hope everybody enjoys the rest of holidays. We have a couple great more sessions coming through the rest of the day. So go get some drinks, go rest stops, and more to come.
Thanks, guys.
Yeah, thank you both. Great conversation. I didn't want to stop you. I would wish we had more time so we could go for another half hour. Yeah, so we have another session coming up here in just about 15 minutes. It's a great panel that I'm super excited about. We have our financial expert, Jim Lebenthal, Catherine McKee, Alexander Greifeld, and that's starting here at 2. You have the link in the calendar already. So yeah, we hope to see you over there. Thanks, guys.
Later. Thank you.